2023 was a strong year for Bitcoin, and a lot of Bitcoiners, including myself, expect that 2024 will be even better. There are a lot of different factors contributing to the general level of optimism in the Bitcoin community, and our guest today is going to break them all down for us. Sam Callahan is a senior market analyst at Swan Bitcoin and the host of the Swan Signal Live podcast. Sam's market commentary is frequently shared across social media and has been featured in publications like Forbes, Yahoo Finance, CNBC, CNET, Bitcoin Magazine, The Block, CoinDesk, and more. Sam has been a guest on popular shows and podcasts such as CNBC's Crypto World, The Investors Podcast, What Bitcoin Did, Coin Stories Podcast, Stefan Livera Podcast, and more. You're listening to The Block Reward, the show where we help you understand Bitcoin without having to be obsessed with it. I'm Scott Dietls, and I'm the founder and CEO of Block Rewards. Part of our mission in bringing Bitcoin to the workplace is helping people understand how it will help them. So if you're interested to learn more about all the reasons why we're excited about Bitcoin in 2024, then stick around because we're about to get into it. All right, welcome to another episode of the Block Reward podcast. Our guest this week is Sam Callahan from Swan Bitcoin. Sam, thrilled to have you on the show. Welcome.
Yeah, thanks, Scott. Super happy to be here talking Bitcoin, and excited to get into whatever we're going to talk about.
Well, it's going to be Bitcoin. We'll see where it goes.
There you go.
You're a senior market analyst at Swan.
Yeah.
Maybe just I would love to know a little bit, or for our listeners, what is your role in market analyst and Bitcoin analysis? Like, what are you predominantly studying and doing?
Well, I think, to sum it up, I kind of keep my finger on the pulse of the market. Like, I'm the person at Swan who's really tracking all the developments in macro, keeping track of everything on chain, looking for certain trends to educate our clients and really let them know, keep them informed. They purchase Bitcoin through us, and then it's for us, we don't just sell Bitcoin to them. We also like to educate them. That's key because, as you know, once you learn about Bitcoin, you're more likely to hold through the volatility. And I think as more people learn about Bitcoin, they actually want to buy more of it because they're like, wow, this is a really, good opportunity. And there's certain characteristics that make Bitcoin really attractive from like a value proposition standpoint. So I'm in charge of myself staying educated on what's all the developments that are occurring in Bitcoin itself, but also the broader macro picture. I write a lot. I write a lot of research. I make a lot of charts, kind of tie it together, make it easy to understand, hopefully, for our clients. I run our podcast. I do spaces. And then, I'm meeting with clients. And it's really, when I say clients, it can be everyone from, a retail investor, just dollar cost averaging every week to institutional investors, so like financial advisors, pension fund managers, and I kind of change the way I speak to each one just so that they can better understand like what's going on with Bitcoin based on the audience. And that's kind of what I do as the senior analyst at Swan, and I love it. It's what I love to do is just teach people about Bitcoin. And I'm like a data head, I'm like a chart head, so I just love kind of collecting charts and then tying it together for our clients to understand things.
You're definitely more into the weeds than most people in Bitcoin and probably, even most of the people who are like pretty into Bitcoin. So I'm excited to pick your brain on a few things and would love to sort of start just by asking you, where your own personal focus is right now in terms of like, what are you tracking? And as we start 2024, like, where is your head in the Bitcoin space?
Yeah, I'd say like one of the things that I'm tracking, like everyone else, these ETFs have kind of dominated the headlines. I do find them really interesting from a more long-term perspective of their impacts on demand and as a new on-ramp for specifically those institutional investors that I mentioned before, like the financial advisors, endowments, pension funds of the world. I think these ETFs are a big deal. So I'm kind of tracking all the developments there. I'm very interested in the mining industry because, as everyone was focused on this ETF. Well, the next major event is the halving. And I think people focus on the halving and they think about, it's, Bitcoin's getting more scarce. The newly issued Bitcoin get cut in half. But I think that's actually the wrong way to think about it. I think the real impact of the halving is on the Bitcoin mining industry and how their revenues get cut in half. And then what you see is almost like a Darwinian survival of the fittest, where only the most efficient miners survive. And so a lot of the times you see hash rate drop off significantly because the older machines aren't profitable after the halving. And so you see the hash rate drop. You see a lot of consolidation and M&A activity where, miners acquire other miners who, and it's really interesting the impact on the mining industry with the halving. And then long term, it can affect like the newly issued Bitcoin. But I mean, just to close this loop, like the reason why I don't think it's that impactful for the price immediately is because at this point, there's about 900 Bitcoin, newly issued Bitcoin a day. That's going to get cut to 450. Now, if you just take the current price, that puts it at about $40 million of newly issued Bitcoin. That's going to get cut in half to like 20 million. And given that there's already around 20 million Bitcoins like mined already, we're at this part of the cycle where that's not that much in terms of like daily traded volume. So even if every single one of those Bitcoins were sold, which they're not, but like if $40 million were sold every single day right now, the market would easily absorb that, given that there's billions of Bitcoin traded in dollar volumes today. So like, I don't think it's the right thing to look at the halving and say like it's going to get scarcer. But I am looking at the mining industry really closely right now to see who's going to survive. Like I'm looking at each miner being like, oh, they got really cheap electricity. They don't have a lot of debt. Like who's going to be the big winner after the halving? So kind of a long answer there, but that's what I'm keeping track of.
There is a really interesting relationship between the ETFs and the miners as well, because as the miners sell to stay in business, the ETFs are really this new mechanism to accumulate, right? And so there's an interesting dynamic there.
Yeah, they're gobbling. It's like hungry hippos with those ETFs. They're gobbling them up. Yep.
Maybe just before we dive too much deeper into that sort of stuff, we start the show the same way every time by asking our guests the reverse Robert Breedlove question. And that is, what is Bitcoin? And the idea here is that everybody has their own take on what is important to them in terms of thinking about what Bitcoin is. And obviously everyone who listens probably knows what it literally is, but there's a lot of gray space in the middle for personal preferences and interpretations. So to you, how would you say what is Bitcoin?
Yeah, it's funny. It's almost like as hard of a question than what is money when you think about it. But I mean, I guess that is what I think Bitcoin is I think it's the very first form of digital money the world has ever known. And I think it's important to split up Bitcoin, the asset, into Bitcoin, the protocol. If I'm thinking about Bitcoin, the asset, I would say it's the first, digital store of value. But then when I think about the monetary network, then I would say, that is the first decentralized, censorship-resistant monetary protocol that allows people to send value to one another peer-to-peer at the speed of light. And then the Bitcoin asset itself, that digital store of value, that kind of allows the whole thing to work because it keeps everything incentivized and it keeps the miners to keep mining blocks, which processes the transactions. And so that just kind of keeps everything going. And it's just a beautiful system. And so it's a brand new monetary system that's completely decentralized. And then you have this new digital money that's never existed before. So that's the real innovation. So if you ask me that like 5 minutes from now, I'd probably answer it differently because it honestly, like Bitcoin is so many different things in my mind. But that's the answer that came out right now.
Yeah, no, and I always say like there is no wrong answer, and it is probably one, myself. If I was the guest, it would change every 2 weeks probably as I hear more of these answers. Like it's been really interesting, kind of getting everyone's take on. But at the end of the day, this concept that Bitcoin is money, and I love how you actually, I think within the last couple of days, you had tweeted a flowchart that shows this concept of Bitcoin, the asset, and Bitcoin, the protocol, separately as the base layer for this new digital economy.
Yeah, like it's something that I actually, it's like a chart or like a graphic that I created like a couple of years ago, and it's just trying to highlight this thesis of where people forget that Bitcoin is a protocol. And that it's going to be ever evolving over time as more developers innovate on it. And there's new innovations that allow for new applications and new functionality. Like we just see this with the Lightning Network, for instance. And then you see it with the Taproot asset protocol, like allowing for different tokenization to occur on the Bitcoin network. but it's all a funnel and it's all built on layers on top of Bitcoin. And the Bitcoin base layer, why it's so important is it's decentralized and it's secure. And that decentralization means that it's really difficult to change. And so there's a lot of settlement assurances, meaning like you can trust that when you make a transaction on Bitcoin, that it will get settled in a trustless manner because of its security, and that's a function of its hash rate and its decentralization. And you can't replicate that. So you want to build on top of that really strong foundation, because every single application that's built on top of it will benefit from that security and decentralization. All funnels down into Bitcoin eventually. So you want to build on that really solid foundation, one that is unchanging. So it's like building on cement instead of quicksand. And that's what I think we're seeing. That's like an overall thesis that I've myself and others have said, because that's what you want to do. You want to take advantage of those unique properties of the Bitcoin base layer. And I think that's what we're seeing play out. We see Fedimints, we see Lightning, and these are all like different layers built on top of Bitcoin that allow for different things, different trade-offs, like faster transactions, for instance, or better privacy guarantees. You're going to see different innovations continue to get built out. And I think we can't even imagine the kind of innovations that we're going to see built on the Bitcoin protocol, 20, 30, 40 years from now, similar to like we couldn't imagine, FaceTiming somebody or like, Uber in the 80s with the internet. We just can't even fathom what's going to be built down the road, but it's exciting.
Yeah, the internet is such a good example, because it's also sort of a protocol, but this idea of like, we're so early that most of the world still thinks Bitcoin is some kind of like flash in the pan scam thing, or like, most people don't understand how substantial it is. And on the other hand, there's a few percents of people that are seriously developing and observing the speed of change of what's going on. And it's super exciting. I think about like in solving the problem of how to have this trustless money work online, this Bitcoin solves so many other problems, which have enabled this ecosystem that you're talking about, where these unchanging rules allow for people to build with confidence. And it's it's a great argument for why none of the other cryptocurrencies will have any lasting value, because these sort of rules create a scenario where all of that innovation, whatever it might be that's useful, should eventually be able to be ported onto the Bitcoin blockchain where the rules don't change. And
yeah, because that's the one thing, like the idea would be that, Bitcoin development moves slower because that's on purpose, because, you can't really mess this up. It's like, it's like building a space shuttle or a nuclear reactor. Like you got to be very careful, because even one problem could bring the whole project down, one mistake. And so it moves slower than these other ones that kind of take on that VC mentality and move fast and break things. And, eventually we can learn from those. I like to think of them as a sandbox and like, oh, it's interesting actually what they did there. And, maybe we'll port that over to Bitcoin one day. But what they can't replicate is Bitcoin's decentralization and security. They can't compete on those two very, very critical components. And so, they can say they have more functionality, but what they can't say is that they're more secure than Bitcoin. And they can't say they're more decentralized, because that's just nonsense. Anybody, with half a brain won't argue that, or they'll say that Bitcoin is more decentralized and more secure. And part of it's just because it was the first one. You can't compete with Bitcoin because its track record, it was the first one. It had a very, immaculate conception, if you will. It went from worth nothing to what it is today, very naturally on the free market, adopted it as money. It wasn't a group of people who launched it. It was a new idea from the beginning. And then it's never been hacked, and it has a 99.9% uptime. So unless something comes around, it really, Bitcoin basically has to shoot itself in the foot. There has to be a problem on Bitcoin for anything to try to surpass it in terms of security and decentralization. So yeah, I agree with what you said. I think eventually a lot of the things will be ported over to Bitcoin. It just takes a little bit slower, but like when we're designing the future monetary system, I prefer it to be slower. I prefer it to be very deliberate whenever you're kind of adding any kind of change. I want it to be very, very thought out. This is a project that's going to be around longer than any single person alive today. And that's what we're doing. We're building like a system that's going to be around for hopefully hundreds and I don't know, maybe even thousands of years,
Yeah. I think in terms of the importance of the different characteristics you might have in a non-state money, one of the top ones has to be network effect. And there's a reason why there's only one internet. Like, then there's no jeopardy of some other competitor to the internet, or maybe there is, but I don't know. But we're unlikely to see multiple internets in the same way as we're unlikely to see a future where there's multiple online monetary networks, in my opinion.
Yeah, it's like the network effect is just like the more users that join the network, the more valuable the network itself becomes. And again, Bitcoin's the largest one. And I just don't see that really changing because it becomes more valuable with every single new user. And same reason why Google has a big moat, and Facebook and the internet itself and languages. Like, the more people that use the language, the more, valuable the language becomes. That it's just the same thing. Bitcoin benefits from these network effects. And it's not just like people using Bitcoin. You got to think about the entire ecosystem, right? All the miners, all the developers, all the infrastructure that's been built out around Bitcoin, the brand itself, brand awareness, like it all is part of this network effect. And it just seems to be gaining steam. I mean, just ask yourself, like I remember 5 years ago when Bitcoin showed up on like CNBC, everyone was like, oh my God, like, look at that, like the Bitcoin ticker. And now it's just like literally every single day. And it's just like a simple, anecdotal thing where I'm like, well, has the network effect increased in 5 years? Like, yeah, I would say so. Everyone's talking about Bitcoin. It's like a mind virus, right?
The Simpsons showed the price is infinity.
Yeah, exactly. And you see Bitcoin everywhere. I mean, everyone can't stop talking about it, whether it's like good or bad. It's just on everyone's mind. And now it's getting talked about in Congress. And, it's just, that's the network effect. And people just don't even understand it. It's happening. And it's just going to keep kind of steamrolling. It's like a, snowball rolling down a hill. And it's really hard to see anything overtaking it. Like, I think, Bitcoin's won in a lot of ways.
Yeah, definitely. So we're talking about, you mentioned building this new financial system, and it's worth, I think, talking a little bit about the existing financial system, because I know that's another place where you spend a lot of your study. Bitcoin, and I know you've also described it sort of like this, as it's a short position or a bet against government's ability to spend, to stop spending recklessly or racking up debt at a eye-popping rate. So both those things are going on right now. Debts are skyrocketing, and the spending is also shows no sign of slowing down. What are your thoughts on the current state of the existing financial system? It's a big open-ended question.
I think it's extremely concerning. I mean, let's just focus on the United States. But like, it's funny because when I say this, it's like technically the strongest one when I'm looking at currencies. But really, Bitcoin's just a play on like, they will continue to debase the currency, and it's because of the debt levels and the amount of spending. They really don't have a choice. There's not many things I'm sure about, and there's only like, two of them is that there will only be 21 million Bitcoin, and that they're going to debase the currency. And in that situation, it's hard, scarce assets that you want to own if they're devaluing the currencies to protect your purchasing power. And there's nothing more scarce than Bitcoin. Really, after this next halving, they're really like, it'll be even scarcer than gold in terms of stock to flow. But also Bitcoin has a fixed supply. Like there's nothing else like it because everything else fluctuates. The supply fluctuates with demand, meaning, even in gold, when the price goes up, it leads to more people mining gold, which increases the supply. That doesn't exist with Bitcoin. There's only a fixed amount. So you can see a really reflexive price movement in that environment of currency debasement. So I think it's important to think about Bitcoin as a function of its environment, and its environment right now is one of reckless monetary and fiscal policy. And so a bearish case for Bitcoin is that these politicians wake up tomorrow and they go, holy crap, like we're spending too much money. Like we have to cut back everything. We gotta do austerity measures. We have to, cut our spending. This is nuts. And then the Fed goes like, whoa, we can't respond to the stock market dropping. We're going to just let everything fall, and we're going to keep interest rates high. We're not going to cut rates like we've been doing. We're not going to add a bunch of stuff to our balance sheet. We're going to keep it running off despite the stock market crashing. We're not going to intervene. And to me, it's just comical because actually what you see is the exact opposite, which is the politicians keep spending because they want to get elected, and they're all short-term thinking, and they feel like they have to keep spending to keep everything afloat. And then you have central banks that have just in the last 20, 30 years, they just adopted this interventionist policies of like having to come in and save the day whenever the stock market falls. And so in that environment, that's what I mean when they're going to have to basically sacrifice the currency, because there's no free lunch. Like, it's the currency that ultimately gets debased when the Fed comes in and responds, when they just keeps printing money. And in that environment, Bitcoin will do well, in my opinion. So that's like the overarching thesis. And so, yeah, like sound fiscal and monetary policy, that's the bearish case for Bitcoin. And so I think that's why I'm so bullish, because I just don't see that happening.
Yeah, it's so unlikely. It's fascinating that, or maybe intentional or fluky, but Bitcoin emerged right after the great financial crisis, which is really the start of this signaling that central banks were going to pump everyone's bags forever, basically. And I think, like, if I think back to when that happened, people didn't really realize, and there was a lot of uncertainty about, what was going to happen next, and then it kind of became too big to fail policy. But prior to that, too big to fail wasn't like an expectation. But flash forward 15 years, too big to fail is an expectation, and how they avoid massive collapses like that is printing, and then it's just like a foregone conclusion now. To your point about being bearish on governments, like getting the spending thing straight. So
yeah, it's unfortunate, really.
Wild times. I feel like on this next time around, it's more that people are starting to understand that money is like, it might not even be Bitcoin as much, being on TV all the time and being like, the Bitcoin brand and being in like the people's public consciousness, so much as the general level of frustration around inflation and skyrocketing costs of living. And everyone understands that, like, the currencies, something is wrong with the money.
Yeah, no, you're absolutely right. And that's the big difference between the last couple of years and maybe the decade prior, is that inflation has finally shown up. And the reason being is, like, the first 10 years really just did a lot of what they call quantitative easing. The Fed just kind of purchased bonds, threw it on its balance sheet, really pumped money into the banking system. And that really led to a lot of asset price inflation. And so you saw it in the real estate market, you saw it in the stock market, pretty much all the assets ripped, which is a different kind of inflation, but you really didn't see, the CPI inflation that we're getting the last couple of years. And the reason being is, since the pandemic, you really had like a combination of both the Federal Reserve doing all those asset purchases just on like a crazy scale compared to the global financial crisis, just like trillions and trillions of dollars. But you also had like the stimmy checks and the fiscal policy go crazy as well at the same time. And that actually resulted in money directly getting injected into the economy, literally into people's checking accounts. And that led to, the first real, elevation in CPI inflation since the 1970s. And, I think that's woken a lot of people up, because they're like, oh my gosh, like, prices are crazy. Right. And now they're saying like, oh, inflation's, we beat inflation because it's back to 3%. And a lot of people are like, everything still feels really expensive, because the absolute price levels are still up 20% across the board since 2019 when it comes to food, gasoline, rent, anything people need. Prices are still about 20% higher than 3 years ago. But all the politicians and the central bankers are all celebrating just because the rate at which the prices are losing their value has slowed. But those prices are never coming back down. And that's what Janet Yellen recently said in an interview. Like, she was surprisingly honest, saying that, those prices aren't coming back down. And I think people are realizing the scam of it all. And that kind of leads to like, almost getting down the rabbit hole of Bitcoin. You have to start asking questions like, what is inflation? Why is this happening? I think a lot of people just think it's a natural phenomenon. Prices go up. That's just what happens. But really, it's a policy decision. And it's wrong. It's basically theft, taxation, a hidden tax on your savings and on your wages. So I think more and more people are waking up to it just because they feel it. They actually feel it. And inflation can be really painful, especially for the ones who are struggling the most, unfortunately, the people who don't hold assets, who are living cash paycheck to paycheck. unfortunately, they're the ones who feel inflation the most. So that's why it's so insidious. But yeah, hopefully they turn to sound money and start to learn about assets and ways to protect themselves from the inflation. Because in my opinion, we're entering a current decade where we're going to see sustained elevated inflation, at least for the next 10 to 15 years.
Yeah, we're recording on my side in Canada, and Canada is the fastest dropping standard of living in the G7, and I don't think it's close. So there's an interesting this is Canadian specific stats, but this is partially from a Michael Saylor presentation that he gave to Argentinian investors in the fall, and one of my favorites, talking about the rate of monetary expansion in the U.S. is around 7%. So CPI 3%, whatever. Monetary expansion is like 7%. Canada, the average monetary expansion in Canada since 1969, the average is 8.5%. That means our money supply doubles, kind of every 9 years up here, and yeah, the prices are noticeable.
Yeah, and I think it's just it's kind of getting to that point where it's finally starting to really hurt people, break people. You see these videos right across social media, and I know a lot of them are from Canada, where people are really struggling and they're wondering how do I make a living here? I work my tail off. I work 2 jobs and I still can't afford. And it's kind of heartbreaking to see. And this is why, fix the money, fix the world. It's funny with Canada too, because you guys got rid of all your gold too. And so I kind of feel for you. It's what were these leaders, what were they thinking? But, hopefully, maybe they'll make a move. Maybe they'll get some new leadership and maybe you guys will embrace Bitcoin, and that'll help you guys kind of right the ship a little bit. One can hope, right?
Hey, everybody. I'm thrilled to announce that Block Rewards has come on board as a sponsor for the 2024 Canadian Bitcoin Conference happening in Montreal, May 16th to the 18th. It's going to be a great event with an unreal lineup of speakers, and we couldn't be more excited about being involved. If you're thinking about going and you don't have your tickets yet, you get 10% off of your pass using the code BLOCK2024, and that's all capital letters. And you can get those tickets at CanadianBitcoinConf.com. Hope to see you there. Nope. I mean, the beautiful thing about Bitcoin is that if we are able to really educate enough people, we don't need permission to usher in sort of a Bitcoin economy.
Bottom up.
That's right. So you wrote an article a couple of weeks ago about your 5 reasons why you're bullish on Bitcoin for 2024, and Bitcoin is up and down. And 2 years ago was a sort of infamously down year. Last year was a great year for Bitcoin. We've touched on a few of the points already, but maybe we'll just kind of wander our way through them. And the first one was ETFs. Maybe as a question for you about the ETFs, which a lot of people were expecting, was it going to be a price bump or a sell the news event? The price in the short few weeks that they've been around has gone down, even though there does seem to be a lot of money flowing into the Bitcoin ETFs. So what's your take on what's going on there and why the Bitcoin price has kind of done what it's done in the last month?
Well, the first thing I'll say is just the Bitcoin market is a global big market, a lot bigger than, even the ETFs. So, I mean, just because there's inflows into the ETF doesn't mean the spot price is going to, coincide with that automatically. But I think a lot of people were excited, and I think there was a lot of people viewing this as a trade. A lot of hedge funds who aren't really long-term believers in Bitcoin, there's a significant price appreciation leading up to the event. It spiked up to 49, and then you saw a lot of profit taking, I think, as it dropped back down quickly. Now, there's been a lot of talk around the GBTC, a ton of outflows out of GBTC for a lot of different reasons. That's the Grayscale Trust. When it was a closed-end fund, not an ETF, before it was converted, it didn't track the underlying Bitcoin well, and it would trade at a significant discount. The shares at the peak would trade about 50% of the underlying Bitcoin, and that's just because it was a poor product. These ETFs, they always trade in line with the underlying Bitcoin, but the closed-end trusts, they can trade at significant premiums to the underlying Bitcoin and significant discounts, meaning that the shares trade at a value above and below the Bitcoin that underlies it. And when it traded at a discount, a lot of large institutional traders saw this as a really good trade opportunity because they were basically betting that GBTC would be converted to an ETF. And then that discount would automatically close to zero. And so if you bought GBTC at like a 20% discount, and then the ETF gets approved and it gets converted, you make 20% as that discount goes from minus 20 to zero, almost like overnight. And so a lot of these funds were looking at that as like basically a market inefficiency. There's a lot of, that should have been zero, but there was a minus 15% discount, and that's an easy 15% trade if they're right about the ETF conversion. And when Grayscale won the lawsuit against the SEC, that increased the odds even more that they would eventually get converted to an ETF. So a lot of people were putting on that trade. And then once it did get converted, that discount went to zero. Well, it's not like they were long-term believers and they were going to keep holding on to their GBTC. And so they just sold it. They already made the money on the discount trade and they just sold it. And so that's just one factor. And then there's like the large bankruptcy estates like FTX who are holding 22 million shares of GBTC. Well, they also didn't want to sell their shares at a discount. So when it finally went to zero, the bankruptcy estate of FTX was like, okay, this is a good price for our creditors. So we're going to sell all these GBTC shares worth $1 billion. And we're going to take that money and we're going to distribute it to all the customers who are still waiting for their money from FTX. And so that's another $1 billion of sell pressure from GBTC. And that's just one of the bankruptcy estates. There's also multiple ones that held GBTC that are basically forced sellers. Now, on top of that, you have GBTC who didn't lower their fee. And so they have 1.5% fee on their ETF compared to all the other ETFs that have like below 0.4, I would say, across them all. There's like 0.3, 0.25. And that's a significant difference. So if you're holding GBTC and you're holding it in like a 401k or an IRA where you're not charged taxes when you sell it out of a position, you're just going to dump the GBTC and go straight into one of these other ETFs. And so all those factors led to a ton of sell pressure in GBTC that really offset the inflows. And so even though there's been, I think the latest was, there's been 7 billion in inflows, but there's been 5.6 billion in outflows out of GBTC. So net, there's only been 1.4 billion into all these ETFs because there's been significant sell pressure. And that's just the GBTC factor, right? And what I was saying in the very beginning was like the Bitcoin market's bigger than just these ETFs. So like there's also macro factors and there's like, what dollar's doing and what yields you're doing. And so for all those reasons, Bitcoin didn't take off immediately. And I think it was like naive to think it would. Now, like I have to say, like I'm really bullish on the long term for ETFs because it also just takes time for these large financial advisors and pension funds and endowments to learn about Bitcoin. Like it takes a long-term time to turn a big ship and pivot and say like, hey, we're actually going to pull the trigger and allocate to these Bitcoin ETFs. And so I think over the long term, you are going to see education improve and these managers start to understand it better and then start to pull the trigger, but it's going to take longer time. Now, the last thing I'll say is just like, when you look at the spot volumes, like liquidity in the spot markets, after FTX collapsed and there was all that crypto contagion, when you look at market depth as a measure of liquidity, this is just like how much money it takes to move the Bitcoin price 1% up or down. It used to be about like $630 million on the exchanges could move the Bitcoin price 1%. Today, after all that contagion, it's down to like 230. So the markets itself were just like not that liquid. And so when you have all these different, fluctuations with the ETFs, you're just going to see the price be very volatile in the short term because the liquidity just isn't that good. So that's why you see shoot up to 49, shoot back down under 40. And I think you're going to see continued volatility. But the ETFs, what they do is they improve the liquidity because it widens the investor base. There's going to be more people buying these ETFs because it just improves access. And then there's going to be a lot of funds using it as a trading tool to kind of arbitrage trading opportunities. So just more trading, more liquidity. So that's a good thing because it's going to improve the spot liquidity. But right now, it's just, there's not much of that liquidity in the spot market. So we should expect volatility. And then over a long period of time, I expect these larger institutions to start to get more involved. And that's when you'll start to see the price really react to the upside. But in the short term, I just expect it to be choppy, a lot of choppiness. And again, another long answer, but That's how I'd summarize.
It's early days, and I think that's a great explanation because I think for most people who aren't in it, they're probably just checking the ticker, if even that, and so it's always great to understand some of the dynamic forces that are happening behind the price.
Yeah, a lot of nuance.
The second one that you had mentioned, which I think is a very big deal that not enough people are talking about, is something called FASB, which is an accounting metric for businesses that might want to own Bitcoin on their balance sheet. And maybe you could just talk a little bit about the significance of FASB for 2024.
Yeah, so the FASB rule changes. Basically, when MicroStrategy was one of the first companies to put Bitcoin on its balance sheets, really what they discovered is that there was a accounting issue where there was no clear rules, accounting or disclosure rules for Bitcoin for corporations, and that it was basically classified as what they call an intangible asset. And why that matters is because these are just like weird accounting rules. But the way it works is MicroStrategy would have the Bitcoin on its balance sheet. Let's say they bought the Bitcoin at 20,000, right? If Bitcoin shot up to 40,000, they couldn't mark that change in the price to reflect it on their balance sheet. But if Bitcoin dropped to 10,000, they would have to mark that loss. And so they'd have to mark their Bitcoin down to 10,000. And then if Bitcoin shot back up past 20,000, they wouldn't be able to mark it back up. So they can only mark losses. And then once it goes back up, they can't do what they call fair accounting, which is just marking the Bitcoin on their balance sheet to what the fair market value of the Bitcoin is. And so it creates this huge impairment on their balance sheets because like you basically can't mark the Bitcoin what it's actually valued in the market at the time. And if it ever goes down, you have to mark that loss. And if it ever goes back up, you can't mark the gain. So it really, you can see how it's like a really big hindrance for you, especially with an asset as volatile as Bitcoin. And so that accounting rule, like MicroStrategy is just, they're unique. They're a unique company where Michael Saylor is at the lead and he's a lot of voting rights and he could get away with just being like, well, we don't care. We're still going to buy a bunch of Bitcoin because we believe in Bitcoin. But for other corporations, like this accounting, it would be a really big hindrance to adoption at the corporate level because like for something as volatile as Bitcoin, it could really create a lot of problems. And like if you look at, Block, for instance, was another one that bought Bitcoin. They marked down their impairments that would happen, especially when Bitcoin went down in the bear market. I mean, it was significant. It was like billions of dollars of impairments where they basically had to mark them at a loss when really the Bitcoin price was much higher in reality. Now, the good news is that the rules have been changed, where finally they voted and Bitcoin will be treated just like any other asset, like a stock or a bond, where these companies now can market, if it goes up or down, fair accounting rules for Bitcoin. And it's a big deal because you no longer have those huge impairments and it's just treated more fairly. It was kind of a ridiculous notion, right? That you couldn't mark it back up. And so now it opens the door for these corporations to more easily use it as a treasury reserve asset, just like MicroStrategy. And so David Marcus, I included this tweet. He's the CEO of Lightspark. And he said, like, you may think this is a small accounting change. That doesn't mean much, but it's actually a big deal. This removes a large obstacle standing in the way of corporations holding Bitcoin on their balance sheet. 2024 will be a landmark year for Bitcoin. Now, I think it's still going to take time for corporations to do what MicroStrategy is doing, and it's going to be a slower process maybe. Like I think maybe 2025, 2026, you'll start to see corporations start to do this stuff. But the important part is this is just another barrier of entry that is coming down for these corporations that hold a lot of cash, right? So it's just a good thing. It's just like reducing the barriers of entry, making it easier, just like the ETFs make it easier. Changing these FASB rules will make it easier.
I personally think that corporate holdings of Bitcoin is one of the hugest use cases that we haven't seen hardly any of yet. And if you think about how many mega corporations there are today that would have no exposure. So like, Apple and Google, and if all these companies start even just holding a reasonable amount of Bitcoin compared to their whole balance sheets, again, like back to your point at the start of the show, it's finite. There's only so much of it to go around. It's not at that point. It's not just people hodling it against each other or fighting for this finite amount of it. But you start throwing companies, and if it starts to become a strategy that's viewed as successful by companies, of course, other companies are going to do it, and you see how this thing could easily become a normalized part of how companies think about managing their cash flow.
No, and like just think about MicroStrategy is not a huge company, really, when it comes down to it. And they have 100 and whatever, 80,000, 85,000 Bitcoins. And that's just one company and one small software company. And you just think about the trillions of dollars that these corporations are sitting on with inflation set to continue. They're going to have to start rethinking their corporate, treasury strategies. Michael Saylor did that in 2020, and he thought about everything that he could invest in. He looked at stocks that were overvalued. He looked at the pros and cons of real estate, owning another yacht, and he came to Bitcoin. And I think other corporations will eventually come to the same conclusion. And then you're right, there's just not that much Bitcoin. There's only 2.3 million Bitcoin available on exchanges. If a small company like MicroStrategy can acquire 185,000, it's like hungry hippos. It's exactly what I said. And now there's nothing holding back those hippos, those accounting rules, so they can just gobble them all up.
It's amazing to me how slept on Saylor is as an executive. You would think at least people would be examining what he's doing to try and understand the merit of it. And it just doesn't seem like many big companies yet are doing that. So we'll see.
I don't know how or why, they have to be like looking at his stock and the success that he's had. I mean, it's not going to last forever, but he's enjoying himself. He'll take advantage of it as long as they stay asleep. He'll just keep doing his thing.
Yeah, they'll be studying him in Harvard Business School one day if Harvard still exists. Your third, I'm going to go out of order, but I think this makes sense. Your third, the next one of your five, we can talk about the extent of the hodling that's going on right now, which kind of ties back to MicroStrategy. And this is something that I think casual outsiders or observers of Bitcoin might not really understand, because Bitcoin's transparent, so we can tell how much of it is doing what, and there is something going on, and people aren't selling.
No, yeah. So the way Bitcoin works is you can kind of see the last time a Bitcoin moved on chain, and there's some assumptions to be made here, because I could be moving my Bitcoin and not selling it, so to speak. I could just be moving it to another wallet. But you can think okay, well, if I have it in deep cold storage, and you see that Bitcoin move, you can assign a certain probability that they're thinking about selling it. Why would you move it out of cold storage, really? If you're touching it, there's odds are that you're selling it. So that's the big assumption with this data. But the fact is that 70% of the Bitcoin supply hasn't moved in over a year. And that's a record high. And so if you just think about, okay, well, at least that's not moving. That's not being sold. That's not being moved even. So 70% in a year, and then it's something like a little over 50% hasn't moved in the last 3 years. And that's when you think about, okay, these are holders that are convicted hodlers that have been just diamond hand through all this bear market volatility up and down. They're not selling. And you just think about these, institutions and the ETF providers and all these people that have to buy the Bitcoin. And if the hodlers aren't selling, that's just supply and demand. And really the question is they're not selling at these prices. So if they want the Bitcoin, the price has to go up. And then eventually I expect those numbers to drop, or there to be a little bit of churn. You'll probably see those numbers drop when you get near the last all-time high. Maybe there's people that will are just waiting to break even because they bought the top or something. I think when you cross psychological levels, 100K, a lot of people will maybe sell. I'm not advising that or anything, but you'll start to see that number come down as the price goes up. And that's what's going to have to happen for these institutions if they want to get Bitcoin, because it's a really scarce asset. And so, yeah, not at these price levels, they're not going to get the Bitcoin. So that's when you're wow, this is both a supply crunch and a huge wave of demand coming at the same time. And it's really not difficult to see why, the price can really react explosively in that environment.
And it's every 4 years, you get a new crop of people who ride the top all the way down to the bottom. So it's if you came in at 20,000 and went all the way down to 5 and then got to see it go up, and then some other people came in along the way and it went to 69 and then they had to watch it go down to 16. It's I feel there are some people that can't wait to get off the train, but there's also a lot of people that are once I've endured one of those things, you're not going to get shaken out. and that number of people that are just not into it.
It's kind of a rite of passage, I would say. Like I held it down in 2017, but I was like stoked when it was dropping. But like, yeah, like once you go through that, you're like, you get used to the volatility first off, and then you're not going to sell, right? Because you start to understand Bitcoin. So each cycle, you get this new base of like convicted believers in Bitcoin who are long-term thinking, who are like, I'm going to hold this for 10 years. I know what I hold is a very valuable, scarce digital money. And that's why you see that convicted hodler base kind of grow each cycle. The speculators get washed out. And yeah, there's a lot of people that don't understand what they're holding. They'll try to trade. They'll just get blown out. But each cycle, that base of convicted hodlers just continues to grow. And I think, props to anybody who came in and bought 60,000, 65 and had to hold through all the way down. Because like this cycle was really vicious, I would say. It was very violent in terms of like the blowups and the corruption. Like props to you for learning and holding through this, and you will be, rewarded through the next cycle. It's just how it goes. And then there'll be another crop, like you said, that comes in at the top, like wherever that is, and they'll get wiped out. But then again, it'll create a new, wider base of hodlers, and then on we go. It's just that's the cycle.
So the number 4 is the halving, and we talked about this at the start of the episode. But what does the halving mean for why you would be bullish about what it might mean for 2024?
Well, I kind of mentioned why I think it's kind of overblown with the price. But if you just look at it historically, like the price does move around halvings, like a little bit after halvings, like 3 or 4 months. And I think it might be kind of coincidental around the macro environment, both of the last halving events, which we could be entering the same thing where, Satoshi like timed this up beautifully or something. And every single time a halving happens, it's like, that's when the Fed's going to cut rates or something. And it's just like amazing how it works. So we could be in for another like coincidental macro environment that serves as a tailwind for Bitcoin's price. But also I just think that markets move on narratives. And I think more and more people understand, what the halving is. And a lot of people will be talking about it. CNBC's already saying like the halving's coming. Like you're just like, I never thought I'd hear Joe Kernan talk about the halving, you know what I mean? Or like at Davos, they're talking about the halving. And so I think narratives are powerful. And so I think leading up to the halving as well, if the narrative takes hold and Bitcoin's price starts to rally because of these ETFs or whatever, it could just add more fuel to the fire. And, animal spirits take hold and people really start to trade this event. And so you could see another run up into the halving. And then if the macro environment's supportive, if they continue to spend money, if the Fed decides to cut rates, like that's when you could see really this thing really gain legs coming out of the halving, just like the past halving. So I think narratives are powerful. And so it is a powerful narrative. This is the one where it has become technically scarcer than gold, which is a powerful narrative. But again, I think that the biggest thing, if you're really like interested, it's the impact on the mining industry. But in terms of price, that's what I would say for the halving. Narratives are powerful.
Yeah, this thing with the miners, it's a complicated thing maybe for people who are new to Bitcoin to understand. But basically, the mining rewards that get paid out to miners every 10 minutes, which is how they run their businesses, it gets reduced by 50% every 4 years. And so, if the Bitcoin price doesn't go up significantly, coinciding with that, the same number of miners are fighting for basically half of the rewards that they were earning before it happened. So
yeah, and exactly. And why it's so bullish long term is like I said, it's like a cleansing mechanism for the mining industry. So only like the best operators with the cheapest sources of energy will survive post halving, and that's a good thing because you want the network to be very resilient, to be being secured by really good operators with very low cost of electricity, because it's going to be very hard for them to stop, and eventually you're going to see the Bitcoin network over time with each halving, more and more of the network as a percentage is going to be mined by people with like very, very cheap, like almost zero cost electricity, because they're utilizing like stranded energy resources or getting really creative, like from land fills or burning tires. Like there's a lot of like really creative ways, but like those are the ones you want to keep winning. And so over time, you see the Bitcoin network become more and more efficient, which is great, right? That's like long term. That's what you want to see is the most efficient mining operations survive, gain market share. And then it's a ruthlessly competitive industry. With each halving, you're just going to see more and more of this. So I think that's the real exciting thing about the halving, but that's kind of more of like a long-term, more nuanced take around it.
I want to kind of, for the last one, number 5, I'm going to broaden it a little bit. So in your article, it was rate cuts, and I do want to talk about rate cuts, but I think there's kind of a bigger thing going on right now that, well, maybe I'll just umbrella call it policy, because there's a few things I want to pick your brain on. Firstly, it's an election year in the US, and there has been lots of talk about potential rate cuts. Why would rate cuts be bullish for Bitcoin? For someone who is trying to make sense of all this.
Well, man, it's kind of like the reason why a Fed would cut rates. It's kind of tough because like the reason why they would cut rates would be that something's going wrong. Like if the unemployment rate starts to spike, stock market prices start to fall, and I expect like in that environment, Bitcoin's price would likely fall in the short term as well. That's when the Fed will do what it does, which is come in and cut rates. And the reason they cut rates is they're trying to basically stimulate the economy out of some kind of downward spiral or recessionary impulse. So they're trying to like smooth out the business cycle. And the reason why, when they cut rates, it basically makes monetary policy easier. So it makes lending cheaper. And so it stimulates economic activity because theoretically, when they cut rates, it leads to banks lending more in the economy, which is more money creation in the economy. When banks lend, it creates money in the fiat system. And so that leads to increased economic activity and higher asset prices if the Fed starts to cut rates. And it's not just cutting rates for them. They'll also do things like return back to quantitative easing, where they're actually purchasing bonds and putting it on their balance sheet to try to stabilize things. In that environment, Bitcoin will likely do very, very well because it's just pumping liquidity into the system. And people have described Bitcoin as a liquidity sponge. Since it's very, very scarce, it just responds to the liquidity conditions. It's very sensitive to it. And so if they start pumping liquidity into the system to try to like quote unquote save things, Bitcoin will rally, I think, pretty hard. And then, again, I said narratives are very powerful. The Fed goes in and tries to cut rates and start saving things. What that signals to the rest of the market is that they're always going to come in and try to save things. They're always going to try to kick the can down the road. The debt levels will continue to increase. And that's worrisome for any kind of investor who's looking at this thing being like, this isn't sustainable. I need to try to hedge against this system that they just continuously won't let clear. They're just trying to kick the can down the road, build up the debt more, which makes it unsustainable and very unstable. Well, why don't I try to put money a little bit into a different system, an alternative system to try to hedge this thing? Because this is just appearing like there's no real, solution here. And like the end game is, currency debasement. So narratives are powerful. And I think if they come in and do that, then they signal once again what they'll do is they'll come in and try to intervene things. And so Bitcoin, I think, will do really, really well in that environment. Like I said, Bitcoin's just a function of bad policy. And in my opinion, not letting the stock market fall and not letting companies go bankrupt when they should, that's really poor policy. And that creates asset bubbles. And Bitcoin, they say it's a bubble, but everything's a bubble when they just go in and save everything and pump money into everything. And so, I think Bitcoin will be, we have a poor choice of words, but since it's scarce, they're going to blow that thing up, and the value is going to go way, way up, just because it's such a tiny, scarce asset.
There are a number of different enforcement actions that are looming in the horizon right now that could, maybe dampen some of the wind in those sails. And one of them is something called FinCEN. And and so this is kind of a Elizabeth Warren and Crypto Crusade. And the other one is this EIA crackdown on crypto mining, or there's a push for gathering information about miners and what miners are doing.
Yeah, I think they're both kind of like very overreaching policies that I would say are like unconstitutional. Like just the mining one's kind of ridiculous because they're starting to do this with any kind of industry that uses a lot of computation and energy. this it's really backed by this like climate change green movement, how like any use of energy is like a waste. And, but the thing that makes it so overreaching is like the amount of information they're asking these miners to report. Like they don't have to do it. Like why they want to know every single thing about their operations, and they don't do the same thing to like say Google running their major data centers. They don't have to ask them like every freaking detail of their operations. It's very unfair to ask the miners to disclose all this information. Why? Because they don't think that the electricity use is fair or like useful. And really, I think it's a philosophical question. Like, do you think that the use of energy, should be dictated by politicians of what is good and what is bad use of electricity? And then there's an underlying point of, well, I would say, securing a decentralized monetary system that provides a digital store of value that can't be censored and can be sent peer to peer is worth every single watt to try to secure that. That is an innovation in the money itself, and it's worth every watt. So, that's my personal belief. And I think there's a lot of Americans who would agree with me. And so that's what I'll say with that one. And then the FinCEN one, they're basically trying to stop any kind of privacy enhancing technology. And this really goes back to the battle against encryption in the digital age and surveillance. They want to surveil every single thing you do on the internet. And if like they're trying to attack crypto mixers, the definition of what they consider a crypto mixer is extremely broad. It basically would entail every single thing that we do in Bitcoin as some kind of crypto mixer service to enhance privacy, and basically treat everybody like some kind of financial institution that would require reporting requirements that are just like not even enforceable, and you can't even comply with them if you wanted to. So even if you try to use Bitcoin in any kind of sovereign way, like running your own node or anything like this, you'd have to like report transactions. It's not even possible in a lot of cases. Like miners would have to. It just makes no sense. And it really comes down to like AML KYC policies that they're trying to apply to these new technologies because they want to track every single thing in the name of fighting money laundering and terrorist activity. And there's so many deep questions there in terms of the right to privacy, fundamental right, human right of privacy in the digital age, but also like the effectiveness of AML KYC policies themselves. They don't actually stop any kind of terrorist financing for the last 20 years. I mean, they've stopped like 0.01%. And all they've really done is erode the privacy of, law-abiding citizens, while at the same time increasing the compliance costs of all the financial institutions that have to comply with these AML KYC policies. They don't even do anything. And yet Elizabeth Warren and everyone else in the world are trying to just expand them. And so, it's ridiculous. And, I think if anybody just wants more privacy in the digital age and wants to protect that, this goes way beyond Bitcoin and cryptocurrencies. It's a much more broad, important question around privacy in the digital age. And it should get a lot of people fired up, even outside of Bitcoin.
Absolutely. They're just two huge issues. I think on the one, to come back to your points about energy usage. I mean, we don't right today, determine how much YouTube people are allowed to watch. And I'm pretty sure that YouTube uses a lot more energy than the Bitcoin network. Like, there are so many grades of gray area of like, if you want to start getting virtuous about how energy is used, and certainly guaranteeing property rights for every person in the world has a lot more value than streaming videos.
Yeah, it's ridiculous too. It's just like a fundamental misunderstanding too. It's like, do they know that like 30% of energy is just completely curtailed and wasted right now? Like they think that just because we're using the energy that it's like not being used for something else, but like miners are incentivized to find the really cheap energy. It's like what I said before. So they want to find like the stranded stuff that nobody's using and they can get it for really cheap. And so it's like shows a fundamental misunderstanding of like the issues that face our energy industry right now, because it's just like not logical. Like it's like, oh, they're using electricity, so that's stopping a hospital from using it. But that's like such a silly superficial way to think about things.
Where I am in British Columbia, Canada, essentially it's impossible to get a license to Bitcoin mine. Like you can't get an electrical connection to, we're not allowed to spend our electricity that way. So coming soon to a dystopia near you.
Man, what's going on in Canada, man? What is going on up there?
It's fucked.
Like, are you guys living in a democracy? Like, for real? It's pretty wild. Like, watching Canada in the pandemic was I was feeling for you guys. I don't know what's happening there, but the trucker protest was one eye-opening thing, but also just like how restrictive the government seemed to be there. Like, it's kind of wild.
Yeah, and it was real. It's not just stuff you saw on TV. Like there was, an unbelievable level of general support at the time for doing all this crazy shit. And
it's just really, I don't know, like everyone has their own opinion or whatever, but like, I would just hope that, freedom, people can choose what they want. It just seemed like things got really crazy up there. And I know a lot of people who left, like they like fled the country, it's just, I've been to Canada. It's a wonderful country, like full of great people. But I was just really surprised to see like, it kind of divulged into that, same thing in Australia. Like it was just kind of like really eye-opening couple of years.
Yeah, I know this is where I think that, we also, Canada, I think punches above its weight class for Bitcoiners. And a lot of it has to do with this. They've created a lot of people who are interested in building a different future up here. So,
oh yeah, some of the best Bitcoiners I know are Canadian, hands down, not even a question. Canada is. I'm very hopeful for Canada. Like I really am. I'm just saying it was just kind of wild. I just didn't expect it. Like honestly, I didn't expect it. And then speaking to some of my Canadian friends and Bitcoiners, they were like, "No, I expected this," and I was like, "Oh, well, I guess I'm just not as informed about what's going on up there."
Maybe one last question, Sam, before we wrap it. You're a podcast host of your own, like you mentioned, and wondering from if you have a personal favorite episode that you've hosted, if our listeners wanted to check out more and check out one of your apps.
Well, one that comes to mind is Bob Elliott. Bob Elliott was like on the investment committee at Bridgewater Associates. That's like Ray Dalio's hedge fund, the largest hedge fund in the world. So he was like pretty high up on there. And he was gracious enough to come on the show a couple months ago. And the why I like it is he's very smart, obviously. He knows what he's talking about in terms of macro and things like that. We differed on some things for sure. And then he's not a Bitcoiner. He's like on the fence. And so I try to build bridges and kind of understand where people's holdups are and like bottlenecks to understanding are. And I think we had a really constructive conversation where we really I like to think I helped him kind of understand things. And then from that conversation, he got into a conversation with Lynn Alden on Twitter. And like whenever I feel like I'm tagging in a heavyweight when Lynn comes in, but Lynn just does her thing. And Bob's like, "Oh, that makes I like how you phrase that." And then he ended up buying Lynn's book, Broken Money, which is fabulous. So I just really liked it because it's like getting a message outside the echo chamber to very, very smart people who are still not fully orange pilled, but being respectful, like of the difference of opinion, but then trying to get them on board, like attract them with honey and not vinegar. Like that's like one of my goals. And I just really enjoyed talking to him. So that just comes into mind.
Cool. I'm a podcast-aholic myself, so I will, now I have something to do later tonight.
Yeah, sure. Yeah, awesome, man. Well, thank you so much for having me too. This was fun. I feel like we went through a lot, so hopefully your listeners enjoyed it. And always enjoy talking to Bitcoiners.
Appreciate you coming on, Sam. So just finally, for anyone who's listening and wants to find more of you online, where's the best place to go?
I'm on X a lot, so you can find me at Sam Calla, so SamCallah. And then you can find my work on swan.com. So we're a Bitcoin financial services company. Like I said, I'm the senior analyst, so you can find some of my work on the blog there. So I think it's the Learn tab. And I do market updates and other deep dives into stuff. And then my podcast is Swan Signal Live. So you can just YouTube it and Google it, and you'll find some of my interviews. So just and my DMs are open. So reach out. I like to just talk to Bitcoiners and answer people's questions. So reach out.
Sam, thanks again. This was a lot of fun.
Thanks, Scott.
Thanks for listening to this episode of The Block Reward. We're trying to do something different here, creating accessible conversations meant for people who aren't obsessed with Bitcoin. If you found this episode informative and engaging, hit that subscribe button to make sure you stay updated with future episodes. Your feedback matters. We'd greatly appreciate it if you could take a moment to share your reviews and help us with our goal of creating Bitcoin content that is simple and easy to understand. Bitcoin has an important role to play in the future of finance. It will change the way we save, spend, and invest. Discover why Bitcoin offers a game-changing opportunity for forward-thinking employers by visiting blockrewards.ca. BlockRewards' mission is helping Canadian employers implement strategies for integrating Bitcoin into compensation and benefits, supercharge your recruitment and retention strategies, and help your team members plan for the rising cost of living by rewarding their work with the hardest money ever invented. Special thanks to our top sponsor, Paramount Employee Benefits Consulting, Canada's only Bitcoin forward benefits and pension advisory. For more information, find them at paramountbenefits.ca. Big shout out to Podigy, our production team that makes all this possible, and BMX Escape for producing our music. Bitcoin is an expansive and dense topic many people walk away from early. To Bitcoin enthusiasts looking for that podcast they can share with friends, family, and colleagues, one they'll actually listen to, we hope that is us. The content of these conversations is meant to be provided for information purposes only. Nothing here is investment advice. Bitcoin is a big topic. Be sure to do your own research before making any personal financial decisions. Thanks for listening.